What's up guys, welcome to the video. So today I'm going to cover my first day trading on Pro Plus accounts and also go over the charts a little bit. But this is what the Pro Plus dashboard looks like. And first off, my name is Jeremy. I'm a full-time day trader and I do have a track record of getting payouts with Take Profit Trader. But let's go look at the charts. I'm going to switch the browser over to Tradovate because I actually had to use Tradovate because there was a copy trader incompatibility issue where I couldn't use Replicanto, the copy trader, while I'm logged into TradingView using live accounts. So I'll figure that out if I can, but if not, I'm transitioning into using the Tradovate desktop app. And I actually really liked it. But one thing I noticed, let me move my head over here. One thing I noticed is that when you're trading on live accounts, it's actually a little bit harder to get fills because when you're trading on prop firms, you're trading on demo accounts. And I think that they give you fills a lot more easily. So this is something that you're going to have to kind of adjust for. Anyways, all these blue boxes are 15-minute inefficiencies, and price likes to draw towards inefficiencies and liquidity and react off them. So these lines are actually liquidity in the form of sell stops. So these are my sell side liquidity, and these are all 15-minute inefficiencies. And these two lines up here are the opening range gap. When I trade, I basically trade using these concepts. And the opening range gap is the closing price of the previous day and the opening price of today for regular trading hours. And on my previous actual trading videos where I shared executions, I briefly covered the opening range gap, but I like to try to trade a reversal or a retracement back into or towards the gap. And I use the size of the gap to kind of gauge the probabilities of it retracing and even filling to the midpoint. But there also has to take into account the underlying market conditions because since today we took out buy side liquidity during Asia session and we are showing a willingness to go lower and draw towards sell side liquidity, and we are showing signatures of bearish fair value gaps being respected. I was only scalping at inefficiencies and not wanting to hold for a retracement back to the gap. So we can kind of see our executions here. It's hard to see it, but I took one right here. Oh yeah, I made 500 bucks today on 5 accounts, and it's pretty crazy. The feeling is pretty crazy trading on live accounts, but you can see an execution here. I was trading 2 to 4 micros just to test out the copy trader, and because it was really volatile today. But I was trading 2 to 4 micros, shooting for about 10 to 50 ticks. And with 2 micros, when I scalped off of this inefficiency, I got 33 ticks. And here I got about 12 ticks. Here I got 10 ticks. And maybe I didn't get up to 50 ticks. It seemed like it, but maybe that's all the executions I took. But maybe we can see actually in the trader performance. So this is my first day. And yeah, I did have one that was 50 ticks. So let's go back to the chart. I just can't find it. It's hard to see. Oh yeah, this was my 50 tick scalp right here off this inefficiency. But this is the 5-minute chart. I actually execute on the 1-minute chart. So this will actually help you see visually what I was doing. I kind of went in with the idea that we're going lower. So I scalped a little lower and this was 30 ticks. And then towards the end of the day, usually we may see a retracement back towards the opening range gap. But since today is so bearish, I wouldn't really anticipate it going all the way up. It might, but I would anticipate it later in the day, like towards the lunch hour. But see how I just took a scalp off this inefficiency? I took a scalp off that inefficiency. And it ended up being $500 across 5 live accounts. And when I said that we can anticipate a retracement back towards the opening range gap nearing the lunch hour, that's because during the lunch hour, you'll often see a run on stops against the side that was profitable on the day during New York session. And everything I say, kind of question it and take it on for study because I know this is dangerous and you can really get hurt trading. And in terms of trading psychology, you can see that I made $500 across 5 live accounts on the day. And I wanted to stop and not push the needle because I was afraid of giving it all back to the markets. And I could keep trying to scalp and make more money, but this is my first day. I didn't want to be greedy. And it's also Friday. And since it's Friday, we could really ruin our weekend and it will just make the weekend last forever and it'll be really dark. So knowing when enough is a good skill to have. But anyways, I want to mention one last thing. So let's go over to the trading view charts because since we are trading on a Friday, it's not unreasonable to anticipate a retracement back into about 20 to 30% of the weekly range. And the weekly range is just the whole weekly candle. So from the high, you can see we've retraced past 25% of the weekly range. And this is about 30%. So we can see here, actually, if we change the setting to 0.07, we can see the 30% mark. So we've passed 30%. Maybe we can see what 40% looks like. This is a really deep retracement. So we're in between 30 to 40%. But anyways, that's all I wanted to say. Take care, be safe, and good luck out there.